Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about trading, and when I say trading, it's in regards to the top moving, most volatile assets in the market today. So we'll be looking at the US dollar pairs, we'll be looking at the top US equity indices, gold as well as oil, try and to understand what's moving the markets. What's the current market structures, and hopefully we're able to identify trading opportunities. So as always, I will begin with a disclaimer. This session is not investment advice. It's not a recommendation to trade. It's purely educational. So always do your own research and practice proper risk management. So once you join in, kindly say hi in the live comment section, and these will confirm that everything is working fine. So let's get started with the economic calendar, try to understand the top key events that are currently happening in the markets. And once we go through that, hopefully everyone will understand what's coming in the economic calendar, what we are expecting, and from there they'll trade from an informed perspective. Sorry for that. So let's proceed. So from the economic calendar, as you can see, we had the summer bank holiday yesterday being Monday. We didn't have much of a movement on UK pound pairs. But then later in the afternoon, we had some good volatility coming in from US equity indices as well as gold. And these presented some nice trading opportunities. So today, being Tuesday, the 27th of August, we have had quite a number of data points. One of them being in the morning, we had the core inflation year over year from Japan, which came in at 1.8%. And this was lower than expected. The overall expectation was 2.1%, and the previous reading was 2.1%. So this was a good thing happening in Japan, seeing inflation coming down, because the biggest market worry was whether the inflation will remain high and the Bank of Japan would be forced to continue hiking interest rates. So in that case, there was no worry of more pressure from Japan increasing interest rates. And as a result, we saw stock market indices recovering quite well. The Japanese yen was weak this morning before it turned out to be quite strong. And this afternoon, we are facing a very strong Japanese yen trading against other currencies. And that's a key determinant in what's currently moving the markets. So besides that, we also had the SPPI, which is the Services Producer Price Index year over year, which came in at 2.8%, slight miss from the expected 2.9%. And of course, a big drop from the previous reading of 3.1%, meaning that the services sector is weakening in Japan, and this was also taken quite positively. So fast forward, we had the GfK Consumer Climate Survey in Germany at 9 a.m., which came in worse than expected at negative 22.0. We had German final GDP coming in at negative 0.1% as expected. Then fast forward to 4 p.m., which has been the most important news of the day, the Case-Shiller S&P Composite 20 Housing Price Index, which came in at 6.5%, way better than expected, but slightly slower than the previous reading of 6.9%. So the housing price index is very important, shows the key market trends happening in the housing sector in the US. So as you can see, there was a big drop during COVID, and then the market continued recovering. But now what we're experiencing is a slowdown in the market, in the housing prices in the US. So in the previous high earlier this year, in April, May, was 7.4%. But since then, we have seen a reduction to 6.9% and now 6.5%, which basically shows that the housing market is cooling down. And this has been a goal of the Fed to slow down the housing market, slow down the labor market. And once they have achieved the 2% inflation target, then they go for rate cuts. So that has been a key theme in the market. And now we are seeing the housing sector slowing down, which means that the Fed is winning in its battle against inflation, which increases the likelihood of the Fed cutting interest rates on the next meeting, which will be on the 18th of September. So as of the CME Fed Funds Futures, which basically measures the probability of the Fed increasing, holding, or cutting interest rates, you can see that there is already a 71.5% probability that the Fed will be cutting rates by 25 basis points, and a slightly higher probability of 28.5% that the Fed will be cutting by 50 basis points. So overall, it seems like the market has already priced in the 25 basis point cut. And if you look at the markets, you'll notice that the SP 500, the Dow Jones, and the Nasdaq have all been moving higher, all trading very close to all-time highs, save for the sell-off that we experienced yesterday as well as today. So given that that's what we are seeing in the markets, then it implies that the big surprise in the market would be if the Fed decided to cut interest rates by 50 basis points instead of cutting by 25 basis points. So a 50 basis points move would be a surprise in the market, but a 25 basis points cut is already priced in. So as I mentioned, once you join in, kindly say hi on the comment section. This should confirm that everything is working just fine. So let's get on to the next part of the presentation. Of course, there's big earnings that are expected this week on Wednesday after market close, and that is Nvidia. So we'll be looking at the Nvidia second quarter sales, which are likely to double. Even a slight miss may hurt shares. So according to an article on Reuters published earlier today, Nvidia is likely to report on Wednesday that its second quarter revenue more than doubled, but investors used to these blockbuster results will be expecting even more from the artificial intelligence chip giant. So a bit of a miss on Wall Street expectations could either stoke or shatter an AI rally on Thursday, a day after Nvidia reports earnings for the May-July period. So the company's stock has surged more than 150%. Actually, it's up over 160%, adding 1.82 trillion to its market value and lifting the SP 500 to new highs, as well as the Nasdaq. So on Monday, it was down 2.2% in afternoon trading, weighing on the index. So the stock is valued about that 7 times its forward earnings compared to the average of around 29 for the top 6 tech companies on the benchmark index that includes the chip maker. So as you can see, Nvidia's escalating earnings estimates pull down the forward PE or price to earnings ratio. So currently, you can see that the stock price is currently at $123.7 per share. That is after the 10-to-1 stock split that happened 2 months ago. Of course, looking at the forward price to earnings ratio, it's at 36.9, which is below the average of 40 for the stock. Apologies for that. So tech heavyweights, including Microsoft, which are spending heavily to build out their AI infrastructure, have been buying Nvidia's powerful graphic processing units that allow large amounts of computing quickly. So these chips are difficult to replace in present-day data centers, which has sharply boosted Nvidia's fortunes. So Nvidia is expected to have recorded a year-over-year jump of about 112% in second quarter revenue to 28.68 billion, according to LSEG data as of August 23rd. But its adjusted gross margin likely dropped more than 3 percentage points to 75.8% from the first quarter, burdened by the cost of a production ramp-up to meet growing demand. So they are not only a benchmark for chips, but they're also a benchmark for AI as a whole, said Daniel Morgan, Senior Portfolio Manager at Synovus Trust, which owns shares in the US tech firms, including Nvidia. So if Nvidia misses, investors are going to sell off every company in AI. And that's the big expectation and worry in the market, that if Nvidia reports earnings that miss the estimates, there's a good chance that the market could overreact to that, and we could be seeing an overall sell-off in top US equity indices. And that includes the SP 500, the Nasdaq. Nvidia is not part of the Dow Jones, so I don't expect the Dow Jones to react as much, as well as the Russell 2000 index. So as you can see, Nvidia has largely outperformed these stocks this year with over 160% while most of them are ranging somewhere between 10 to 20% year to date. So some investors are concerned about the company's ability to meet lofty expectations and have questioned the pace of spending on AI by Nvidia's largest customers. So when you look at the historical investor reaction to Nvidia results, in quarter one, there was a surprise of 10.3% positive, which led to a 24.4% rally in the market. So in the second quarter, we had a 20.3% surprise percentage. We expect a 0.1% change. Then for quarter three, if we get 12%, then it's an expectation of negative 2.5% in the stock market reaction. So there may be more trouble brewing around potential production delays of Nvidia's next generation Blackwell AI chips. So from the CEO, Jensen Huang, who said in May that the chips would ship in the second quarter, but analysts have flagged design hurdles that could push the timeline. So this means revenue growth might take a hit in the first half of the year, research group Semi-Analysis said. Margins could also get squeezed if Nvidia's chip contractor TSMC raises fees, a possibility that the Taiwanese firm hinted at recently. So remember, majority of the parts of chips that are sold by Nvidia are actually supplied by the Taiwanese company, which is TSMC, or basically Taiwan Semiconductor Company. So Nvidia is likely to forecast a 75% surge in that quarter revenue to 31.69 billion, and this is based on LSEG data, ending its 5-year quarter run of triple-digit growth and reflecting tough comparisons from a year ago when it surged about 206% to 18.12 billion. For the past 3 quarters, Nvidia's growth exceeded 200%. So we are reaching the law of large numbers here. Once a company gets to a certain size, it's just physically can't keep up with the same growth. So clearly, we know that Nvidia has been performing pretty exemplary over the past couple of quarters. So you can see the overall growth, and analysts are estimating a much slower growth because the company has become one of the biggest companies in the world, and it's difficult to maintain the same growth it has had in its earlier stages. So that being said, this is expected to be the biggest market mover, and that should be second only to the inflation data that we're expecting on Friday. So on Friday, we'll be expecting some big inflation data from the US, which will be the core PCE price index, which is the Fed's favorite measure of inflation, and we have an expectation of an increase of month-over-month change of 0.2%. So that will be a big market mover, but before that, earnings tomorrow in the evening at exactly 11 p.m. So a majority of the reaction is expected to be experienced in the market on Thursday at market open. So that being said, also I would like to now jump into the charts, try to understand what's currently moving the markets, what are the prevailing market structures before we end the session. So as always, if you have joined, kindly say hi. If you have any questions, feel free to type that in the comment section. And on top of that, I would really appreciate if you liked and subscribe to the YouTube channel. If you're watching this on X, remember to like and share this live so that other traders can benefit from the session. So hello, Elvis. Hello, Drew David. Thank you for joining. Hello, Ilibet. Joseph Manzi, Emmanuel Kipe. Thank you for joining. You can see some very nice comments. So I'll be responding to this right away. So let's get to the charts. So this is the MetaTrader 4 trading application. MetaTrader 5. We use it to trade multiple assets on one singular platform. If you normally prefer trading using a smartphone, then you should download the Equity Trader app on your Play Store as well as Apple App Store. So I don't know if I can share the comment here. So just check for Equity Trader. It's a seamless solution where you can do deposits, withdrawals, as well as trading directly on the app. So clearly, we know that there has been a big sell-off on the dollar index for the past couple of weeks. I would call these almost 9 weeks. However, as the market opened this week, all we have seen is a struggle by the dollar to recover from the big sell-off. So right from the opening price on Monday, which was right here, I would say the closing price on Friday was here. Monday opened with a slight gap to the lower side, and then the market recovered and kept going up. Then today we opened with another gap down, and the market has really struggled to move higher, meaning that the dollar is struggling to recover, but yet the price action from yesterday and today is showing that the dollar is quite resilient and strongly opposing some further sell-off. So, with that in mind, we have seen currencies make some major moves, especially the pound, which has rallied for 2 consecutive weeks against the dollar, hitting a high of about 1.32183. But then, if you look at the price action this week, since Monday yesterday, we didn't have much happening in the UK due to the summer bank holiday. But then today, as the market opened, we saw an acceleration or the pound gaining against the US dollar before it pulled back downwards. Notice that it managed to break last Friday's high as well as yesterday's high, which indicates that there's a likely opportunity that the market might actually break out towards the upper side later today, especially during the New York session. So seeing a dollar that is struggling to recover and a very strong pound, we could be seeing a continuation of the same, but you have to be also aware of the 4-hour candlestick that just formed, which indicates a rejection of higher prices. So perhaps if the dollar continues to recover against other currencies, then we could be seeing a reversal in this momentum. So on the daily, we know that we have broken a couple of major resistance areas, these being the key highlight, the high on the 13th of July. So now we are looking at a market that is, sorry for that, this bug is disturbing me. So from the daily time frame, you can see that this was the highest price that we saw in the month of July and also the highest price within the year. So the last time we saw price trading at that high was back in 2022. So with the pound being pretty strong and breaking that resistance, notice that there wasn't much of a struggle breaking above 1.31438. The market continued moving higher, and what we are seeing here is a market that is weakening and could potentially pull back to retest this support area. So this should be on the lookout for this, especially considering the 4-hour candlestick that indicated a rejection of higher prices. So the potential pullback would be playing out as the dollar resumes some form of temporary strength. So as for the Euro USD, we know it has been the same story, strong bullish momentum with pullbacks along this trend line for the past couple of weeks. And now we are seeing the market trending back towards the same trend line. So in this case, notice that yesterday's high is similar to the, yesterday's low is similar to the low we are seeing today. And this might be a key and a very strong decision point for Euro USD traders because the market could either break below this or bounce from this. So a bounce would be nice. We just continue with the bullish momentum, but then a clean break below this area would signal the market is taking a step back, and the next available area would be the lowest price that we saw on Thursday, and this is around 1.10999, or basically 1.11. So that's a key area to watch for Euro USD traders. So for pound yen, it remains trapped within this, I would call it an ascending triangle. So we have seen this cycle happen over and over again. The overall direction is more of a sideways momentum, but seeing the yen being very strong this afternoon, after the market hit the upper trend line, then the overall expectation is that this swing continues until you get towards the lower trend line. So for pound New Zealand, it's also trading within a triangle, some funny kind of triangle, where volatility is reducing each day, and now the swings are getting smaller and smaller. We just bounced from the lower trend line, so we might be headed back towards the upper trend line as the market waits for the eventual breakout. So USDN is something we had discussed last week, and we projected that the market would drop to 141.710. But then the market somehow found some support along this area, 143.436. bounced off. So as the dollar was strengthening yesterday, it was also strengthening against the yen. We found some resistance here earlier in the morning, and now it seems like the market is moving further back downwards. So with this kind of price action, there's the overall expectation that the market continues pushing further back downwards. And in this case, a potential drop towards 143.436, even though the market is struggling around this area, which was a major support area. So it could also be bouncing from here, but the overall direction of the market seems to be bearish. And in this case, there is a good chance that the market could eventually extend this bearish momentum and drop towards this area. So after the market formed a new high here and then pulled back downwards, you'll notice on the 15 minutes chart that the support area that we have been seeing since yesterday has already been breached. So even if the market is going back down upwards, there's still a good chance that we eventually see the market dropping to 143.436. So for for the Nikkei 225 index, which I showed you the strong bullish momentum, which is weakening here. And since then, what we are seeing here is a market that is completely failing to form new highs. So if you analyze the highs that we have seen over the last 4 days, that high followed by this high, I would say this is almost equal. Then yesterday, a much lower high, and then today, a much higher high, but it doesn't beat the previous two, which basically implies that there is a likelihood that the market might eventually drop. So if you are to connect highs and lows from the most recent price action, I would go with this being the prevailing trend line, slightly slanting downwards. And now if you look at the lows for the last 4 days, I would most probably go with this. So this seems to be the prevailing trend lines, indicating that the market is now on another swing towards the lower trend line, indicating that the Nikkei 225 index could be taking some steps further back downwards. So gold was on the course of hitting a new all-time high yesterday, failed to break 25.26. So the all-time high is 25.31. So now after failing and pulling back downwards, today we are seeing more momentum downwards. So even though the market is struggling, you can see it's not a straightforward move. So a big drop, a rally, drop, rally, drop, rally is basically setting up what looks like a potential breakout. And the breakout could eventually play out if the market breaks below this area here, which has been the lowest price in the day. So on the 15 minutes chart, you can see that there seems to be existing some form of trend line, indicating that there is a declining resistance where resistance keep going to lower price levels. So every time the market gets to this area, finds resistance, it keeps going down. And now there's a key level test around 2504. So currently the market is strongly pushing downwards. And if we break this, we are already below yesterday's low, then we could be headed for a much lower price action level. And this is an area around 2486. So probably a clean break here would see us drop all the way to 2486. So from the forward chart, this is how it looks like. So you can see the sustained pressure to keep pushing prices downwards, which means that the dream of seeing a new all-time high this week might not be applicable. So for Brent oil prices, we saw this pattern here. I remember drawing the double top bottom formation here. So we had already the first bottom and the market got back to the neckline. The second bottom and the market is now pushing towards the neckline. So yesterday we had quite price action. I would say it was a pretty impressive rally. So the market opening here for the week and closing here for Monday, 2.41% was quite a blessing for the bullish traders. But then if you look at today's price action, it's more of a flag formation. We haven't seen much of a unidirectional activity. So it's just swings up and down within these two trend lines, which means that the idea of making a market entry might actually make sense when the market eventually breaks to either side. We know that the breakout will eventually come, and I would be opined to expect that the market eventually bounces and potentially leads to the completion of the pattern, forming the perfect W-shaped pattern for Brent oil. So in this case, there's that overall expectation, but as for now, we remain patient and observe what happens within this flag formation. So for the US Tech 100 index, or basically the NASDAQ index, this is what we're experiencing. So after the big sell-off, remember when you were talking about the reverse carry trade, we saw the market dropping 16.92% before it made a recovery up to almost 4% towards the all-time high, which means that the market recovered about 12% of the big sell-off. But then upon hitting this area, we have seen a strong resistance and the market is moving downwards. So as always, we are almost at 4:30 p.m. We know that this is the most volatile time during the New York Open. So if you like or enjoy trading in a volatile market, then this might be it. We are seeing the Nasdaq almost breaking the support area here. So it was the low that we saw on Thursday last week. So on Friday, the market didn't hit that area again. Then on Monday, which was yesterday, we had a big sell-off and the market found support along the same area. And now today being Tuesday, we are seeing the market breaking the support area, which indicates that we might be seeing some more bearish momentum. So the market opens in the exactly 1 minute. So we should be seeing some good volatility. So just to give you a brief highlight, you'll notice the spread widening and the market moving a little bit faster than usual in the next 1 minute. And this can bring in some good volatility. Just to give you a highlight of what happens at the market open, I would like to highlight what happened in the past couple of days. So yesterday, this was the price action at market open. Friday last week, this was the price action. Then if we keep going, then you'll notice the action that happens just after market open. So there is that, there is that. So this is when you get the big move, and if you're on the right side of it, then you get to enjoy. And this can happen with or without news, but in most cases, you'll enjoy some good volatility during the market open, and that can lead to some good opportunities. So if you just keep tracing the performance of the Nasdaq just around the market open, then you notice that around the market open is when we have these big moves. So they can be pretty rapid, but when you capture a nice entry opportunity, then you can enjoy some good returns within a short period. So it's especially more volatile for the Nasdaq compared to the other indices, but also it's present in others. So for the US 30, I want you to pay a very keen focus on the 4-hour chart and look at the 4-hour candlestick that was formed yesterday in the afternoon, and then follow it up from the 1-hour chart to see what has proceeded then. So the market moves up, erases all the gains. So yesterday, the Dow Jones slightly touched a new all-time high of 41,421 before erasing. So from the daily chart, this is how it felt. If you look at the daily candlestick, you'll notice that it was a shooting star with a very strong rejection, which implies that we could be seeing some downside momentum today. So looking at that and then narrowing it down to a smaller time frame, in this case, I'll be using the 15 minutes time frame, then you should observe that there was a very familiar pattern here, which is something that we describe as a head and shoulder pattern. So in a head and shoulder pattern, the market just goes ahead and forms the first shoulder. Then a head is usually higher, and the market gets back to the neckline. Then the other shoulder starts from here, goes to here, and the shoulder was just completed. So now we are seeing a head and shoulder pattern on the Dow Jones, which implies a reversal, and we could be seeing the market eventually going for it and making a big drop from here. And if that plays out, then the potential is that the market now drops to the next available support area, which is around 40,953. So for US 500, we are seeing a similar price action. So from the 4-hour chart, you can see the struggle where the market was trying to form a new all-time high, didn't quite make it. There was a big sell-off yesterday. If I zoom here, you'll notice the big sell-off. Then today, in the morning hours, the market attempted to recover. And then within 3 hours, we erased all the gains. And now the market is really struggling to break below this area. But if it does in this session, then in that case, we might be seeing the price accelerating to the low that we saw on on Friday, which is 5,583. But also a bounce from this area could be playing out. So you don't have to bet against it. So in this case, we observe what happens in the current hour as the market opens. And if there's a drive lower, then we enjoy the bearish momentum down and perhaps even room for some further downside momentum. So Russell 2000 also formed a head and shoulder pattern similar to the Dow, has managed to break towards the lower side. So the next available support is all the way down. So around this price action level, this is 2176. So in this case, I expect the momentum to extend all the way down to 2176. So that being said, for Bitcoin, we had this triangle formation. So the overall price action in Bitcoin for this particular period was just sideways. Before we had the major breakout happening here last week. And now after this candlestick was formed, you can see the shooting star here, market moving up, rejecting higher prices. We saw a big sell-off happening yesterday, and today it continues with a key level support at 61,558. So that remains a key level to observe. And now we have the USD trading against the Swiss franc. We had projected a support around 0.84455. So that is currently being tested. And if we see evidence of buyers coming in, this could be the basis of a nice swing trade higher if the market rejects that particular price action level after the big drop that we experienced here to the previous support. So for New Zealand USD, it's a bullish momentum for the pair with a very strong resistance along this area. There was a clean break on Friday, Monday a slight pullback, and today it seems like the market is attempting to move higher. So we observe this area to see if there's a clean break, and if the market breaks above this area here, then perhaps from there we should be looking for bullish positions. So if there's no break, then we remain bearish. So this is the key level to observe, which is the highest price that we saw on Friday. So the UK 100 or the FTSE 100 index seems to have found some strong resistance here. Rejected. I believe that's the futures contract. So let's look at the spot contract. So on the spot market, we have seen this pattern play out on the daily market, oscillating between these two trend lines for a while. This is the fourth month in a row that the market is remaining between these two trend lines. So yesterday, we saw the market retesting this area here. This was Friday, then yesterday again, and then today the market attempted to break, failed again, and its attempt was met with a very strong selling pressure. So from the 1 hour chart, that's how it looks like. From the 4 hour chart, this is how it looks like. And if we happen to see the market holding on to that, then we could be seeing some further downside momentum. So from the 1 hour chart, this is how it looks like. So we haven't breached the low of the day, but we have crossed the gap that we saw at the market open. So the market is continuously retesting this area, but clearly an attempt to move higher was met with a selling pressure, which implies that we could be seeing some further downside momentum, especially on higher time frames. And a key thing to observe would be the close of this candlestick at the end of the day, especially if it would be a shooting star. So that's it for today. The Nasdaq seems to be moving on quite well. So I told you to observe the price action at the market open. So far, this is what we have experienced. Some good volatility here, but eventually the market is expected to take a direction. So if we happen to see a market-wide sell-off, then this could mark a nice opportunity to go for a short selling position. On the 1 hour chart, this is how it looks like. The market has already failed to form higher highs. So if we break below this trend line, then we have another level here around 19,103. So if we see evidence of a break, then the idea is that the market continues to drop and eventually gets to 19,103. So that's it for the day. Remember, we have a Pips and Branch event coming on 6th of September. It will be on a Friday, so make sure to register. You should find the links on our socials. And we have a new episode of the Bullish Banter podcast available. Make sure to check it out on FX Pesa YouTube. We have a new episode of the financially incorrect podcast. Make sure to check it out. And if you have any questions, feel free to reach out. So on the question side, let me check. Comment from Dennis Patrick, learning a lot. Thank you. I always appreciate a like and a retweet of the live. Helps reach more people. So a question from Drew David. When the Fed cuts interest rates, will we see a sell-off on indices? No, that's expected to be bullish, actually. So if the Fed decides to cut interest rates, then that basically makes capital cheaper. And as a result, we could be seeing the indices moving towards a new all-time high. Of course, they are already high, so we could be seeing a correction in the near future. But given the sell-off we are seeing this week, the correction could happen before the meeting on 18th September. So, good question. In which pair is best today? I don't know whether, I think the NASDAQ is the ultimate one. So using the 1 hour chart, if the market closes at that level, that would be a clear signal to go for a short selling position. The Dow also seems like a likely candidate if it breaks below the neckline. Russell 2000 is moving quite well. I don't know. USD is also moving quite well. So today we are spoiled for different opportunities. A good question, Emmanuel Kipe. What does the FOMC mean? So the FOMC is called the Federal Open Market Committee. So it's a committee of central bankers from various regional banks as well as the Central Bank of the US that meets once in a month, usually about 8 times a year, where they decide on the monetary policy of the US, and whatever they decide is implemented by the US Central Bank, which is called the Federal Reserve. So a good question, where can I get the commitment of traders reports each hour? The commitment of traders report is released once from the CME website. So Chicago Mercantile Exchange. So you have to check on their website. They release the data weekly, not hourly. So hey Raymond, hey Delvis or Barasa. Do gold sell after rate cut, or it usually buys? Is expected to drive bond yields lower, and investors are expected to continue pumping gold higher. So one of the long-term bets for this year, if we see rate cuts, we should be seeing gold moving even higher. So a good question on how does leverage work? I would like to refer you to a course I specifically designed for this. It's available on the FXPesa YouTube. It's called the Novice to Pro series. From there, you should be able to learn all you need to know about the basics of trading, such as leverage and everything else. So thank you guys for joining. Thank you for the participation, the questions, the liking the video, sharing, retweeting. All that is very much appreciated. I hope to see you on the next session. Of course, if you'd like to register for a trading account, make sure to check the links in the description below. If you're on X, then visit the FXPesa Twitter page. So last comment is good. Tell FXPesa to add soybean futures. Yes, I'll be happy to communicate that. Thank you, everyone. See you on the next one. So last one, I think I can address this one before I cross. So I thought the Fed rate cuts is bullish for the dollar because it increases demand for the dollar. No, demand for the dollar drives the dollar higher, and less demand drives the dollar lower. So when there's rate cuts, it means that capital is cheaper. People can be able to borrow at a cheaper rate, which increases the amount of money in supply in the economy. So if interest rates are high, then the bond yields are also high. So currently, the bond yields in the US are over 4%, which means that a lot of investors are buying the dollar and then giving the dollars to the Fed to get the bonds, which dries out the supply of dollars, making the dollar stronger. So if you've experienced dollar shortages, especially in Kenya and other countries over the last 2 years, it was mainly because the Fed was hiking interest rates and making their bonds very attractive. But now, cutting interest rates does the exact opposite, allowing a lot of capital to flow in the financial markets, leading to excess dollars and a much weaker dollar. So thank you very much, guys, and I hope to see you on the next one. And hello, J Squad. Thank you for joining.